Now, Nigeria's 2019 election is one of the key things analysts say will shape 2019. Kayode Akindele, partner at TIA Capital, and Femi Oladehin, partner investment banking at Argentil Capital Partners, join me to discuss this and other themes that are likely to shape the performance of Nigeria's economy in 2019. Gentlemen, thank you so much. It's a pleasure to have you today.
Thank you, Esther.
It's been quite a year, and we've all witnessed all the highlights and the key themes that have shaped 2018. From politics, we've seen the major downturn at the capital market. We've seen that flight to safety. We've seen, of course, budget performance not so great, but mostly it's been politics. Femi, let me start with you. Thinking back over the year, what would you say were major highlights, either tailwinds, headwinds for the economy?
Obviously, I mean, there's some positive headwinds. I think we had an average crude oil price of about $65, $70 during the first 11 months of the year. And I think that sort of helped, especially from the government revenues perspective, comparing, especially if you remember what happened in 2016 and 2017, where government was barely meeting 25% of revenue targets. I think that was definitely positive. But obviously, on the negative side, there was significant flight to safety. The stock market's probably lost about 20-25% of its value. You're dealing with also high interest rate environment, in spite of the central bank's plans to try and moderate the direction of interest rates. I mean, they've come down from where we started the year at, but still, government is still borrowing at double digits. And I think another positive we could probably say is the fact that the international capital market started to look like sovereign debt in Nigeria as well favorably. I think we had 2 Eurobond issuances in the course of the year. But I think if you were to sum up the year, it would probably be a combination of a lot of good and a lot more bad.
Okay, I was going to say that. So
a lot more bad.
More good,
again,
more bad.
as you can imagine, growth has still been sluggish. We've barely broken through 2% on the GDP front. And bearing in mind the fact that we're coming from a very slow period, that remains a big concern for government.
Do you think that Kayode, let me ask you this. Do you think that we've lost sight of the fact that coming from 2017, we're coming out of a recession and we're coming from a low base, and we needed that time to, for the economy to pick up in 2018, gain some traction, and then just take it from there? Do you think that, because there have been a lot of criticisms this year, of the government and as to how the economy has progressed, we've seen saw GDP growth quite soft this year. Do you think that we lost sight of that?
I think so. I think there are 2 things. I think one, the international situation hasn't helped. You had a flight from risk from the EM market. You have US interest rates rising, and that has affected lots of markets, especially like Nigeria. I think positive from that is that the currency remains stable during that period. It has remained at 360, remains stable, which has helped investors. You've had return to growth, although sluggish, at least we're getting some growth. But then you have the negatives. For example, 2018 budget was only signed in June. So in reality, we've had less than 5 months of this year's budget. And so when you start looking at budget performance, you can't really start your budget halfway through the year and expect to have significant performance from that budget. And so I think when you look at all those things, it's really been, I think, a year of consolidation. It could have been a lot worse than it was.
So are you saying that we couldn't have done better than we did, given with what we had to work with?
I think given government revenues, given the fiscal position of Nigeria, we might have had slightly better growth if we had better, because the problem is that there's been a lot of focus on agriculture, but they had issues in the middle belt that have affected harvests, despite the kind of interest you're putting in there. You haven't really seen that in food inflation yet. And hopefully it won't come through. But things that have affected growth numbers, when you look at non-oil growth, agriculture hasn't grown as fast as it was in 2017 because of issues like that. So, I mean, there have been certain things that have slowed down growth, but it could have been much worse here. Because if you look at some of the other emerging market countries, if you look at Egypt, what 2018 has been like for Egypt, Argentina, other countries, you see that it could have been a lot worse.
Okay. Femi, for this year, for the typical investor this year, either the local investor, but I would say particularly the foreign investor, how would do you see that investors describing this year, investing in a country like Nigeria?
I think they'll describe it as probably mixed. In fairness, I think that at the beginning of the year, we all knew it was going to be a difficult year. The only variable that everyone was hoping would probably tilt it one way or the other was oil prices. Again, you know, I try to detach myself from the politics because when you look at unless like Kayode said, when you look at the dynamics that the economy walked into in 2018, we were always, you know, going against the grain. But in terms of specifics, I think that for a foreign investor, looking at it from a portfolio perspective, I mean, the debt market haven't done badly. Yeah, yields have moved a bit, especially on the Eurobond side. But if you're looking at it from a portfolio perspective, they will still feel like, look, Nigeria has been a bit of a basket case. But like Kayode said again, you've got to put that into perspective with the rest of African countries and other emerging markets. Those guys have suffered even more. And, you know, so we can always look at it and say, oh, we could have been growing at 5–7%. But we're not Ghana. We don't have the overhang that you know, we have the overhang that Ghana isn't dealing with, or Ivory Coast isn't dealing with. And I think that's always important to put into perspective. So if I was a foreign portfolio investor, I would basically have, at the beginning of the year anyways, emerging markets, I would have an overweight debt. And underweight equities. And I think anyone who's taking that perspective will probably just feel that, look, I haven't done badly this year.
Now, Kayode, let's talk about currency. This year we saw the central bank, we saw it able to boost the foreign reserves over $40 billion, but we've seen the central bank at the same time burn through those reserves trying to, you know, stabilize the naira. And what is your perspective in terms of how the CBN has been able to stabilize the FX market, especially the INE window, which it introduced, and just try to make sure that foreign investors were able to repatriate their funds? Talk to us about how you saw that market perform this year.
I think central bank has a lot of criticism about how it's dealt with the foreign exchange market since 2015. But I think when it brought in the IE window, and from what we've seen in terms of currency movements in other countries in the last 4 or 5 months, the Nigerian Central Bank has done pretty well to keep the currency stable at 360. I think where FX reserves are created, but the problem is that we're still stuck in this fuel subsidy issue, where higher oil prices mean higher revenues for government, but increased subsidy costs. So, and that is what's been affecting the FX reserves in the second half of the year. Because although we had higher oil prices, because we have maintained the price of petrol at the same price, the underlifting, or whatever they want to term it, means that there's a much higher amount that's spent that way, which means less revenues for the government. So until we kind of address that issue, and I think it's a difficult issue to address, because we were saying, okay, just let fuel price go, but it's going to have such inflationary pressures, especially for poor people. But I think there should have been more effort in terms of trying to get those refineries, Nigerian refineries, at least up to 50% on a sustainable basis, so we can spend less on importing petrol. But I think in terms of FX, it's been pretty good. The foreign reserves are import cover, I think, is about 9 months of import cover, which is good compared to other people. And maintain that 360, even when other currencies are moving, it's fine. But I think 2019 is going to be difficult to maintain that, especially post-election, whoever wins.
Femi, let's talk about debt for the government. Now, there was that strategy at the beginning of the year to pull back. That's the government domestic borrowing, pull back and allow more space for the private sector. And we saw that work for a short time, but then all of a sudden things changed and we found ourselves with a higher debt service cost on the side of the fiscal authorities and the private sector having less time to, or less space to play at the market. And it looks like we're going to go into 2019 with that high, you know, yield. I mean, just looking at the yields at the market, they're a lot higher now. So for you, how would you say the government handled that this year? Was it something that it was just inevitable and it happened and there's just nothing they could do about it?
You know, a lot of people don't like it when you talk about the inevitability of the challenges that we had. But you know, one key theme that has become very apparent in the market is that government revenues were very low. And in an environment where you have low government revenues, the only option that government has to fund its budget is to borrow. Of course, in changing the borrowing mix, that did help the local markets at the beginning of the year. Like I said earlier on, yields started to drop. But the reality is that there is a capacity as well. There's a capacity issue in the market. And it goes back to a lot more fundamental issues that the economy has. One of the biggest challenges that I've always said to people that we have as a country is actually capital formation. So the fact that government can continue to, even if government completely walked out of the domestic debt market, there's not enough capital to galvanize debt into investment or galvanize debt into companies. And that is almost something that we need to fix on a long-term basis as a country, to say the savings base of the country has always been the problem. If we have significant savings, then people are able to create new businesses, they're able to create new operations, and that's where the challenge is. So even if government walked out of that domestic debt market completely, the problem is there's not enough quality credit to be written by the banks. So there would almost be a flow back to the CBN doing open market operations and all of that. And I think that's something that we need to talk about long term.
Kayode, 2019.
Yeah.
I mean, I think it's almost easy to just plot the graph in terms of how things are going to pan out next year. So for the first 2 quarters, I suppose it's all going to be politics, you know, the new government, either the incumbent and the new one settling in, and of course, the budget and every other thing. So, but what are your expectations in terms of how we're going to get growth or this economy back on track in 2019?
I think whoever wins the election in February is going to face a very difficult question. We're staring at a fiscal cliff. I think the present government took a gamble, and they didn't want to do. You had a choice. You had to do deep cuts in the civil service and programs to bring down expenditure to match your reduced revenue, or you keep that the same, and you hope that you can grow revenue, especially independent revenue, to a process where you can make up for it, and then we're covering with borrowing in the meantime. It hasn't really worked out. Government revenue has not matched what the government thought it was going to do. Things like VAIDS, we haven't heard much about what happened with VAIDS. We haven't heard much about, I mean, FIS is showing impressive growth in numbers, but it's in Naira. If you convert that to dollar equivalent, given where the exchange rate is now, it's pretty flat, if not less, than in 2013, 2014. So whoever the next government is has to make a decision. And I think they have to make some very difficult choices. So it's almost, I almost feel sorry for whoever wins the February election, because they're going to have to make very difficult choices. I think the second thing is that we have to now look at a lot of the international factors. There's a very real possibility of a hard Brexit. There's a very real possibility that an increasingly isolated President Trump is now going to have to double down on his China issues. Now, if that affects world trade, it could affect the oil price, especially if it affects world growth. A hard Brexit could have an effect on the markets as well. All these are going to have effects on Nigeria.
Okay.
So I think
we only have about 1 minute. Like Femi, go 1 minute. Your perspective. What are you expecting for next year?
Look, next year is going to be a challenge. I've always said that our 4-year electoral cycle is a curse. It allows our government to think in short terms. What really everyone should be expecting next year is that the economy is just going to coast. Literally. I think there's a strong possibility that the stock market might see some recovery, driven mostly by local investments. But in terms of, you know, from a GDP growth perspective, I think that if we're able to achieve 2 to 3%, it wouldn't have been a bad year, given the headwinds that the country is having to face. Okay,
thank you so much, gentlemen, for your time today. And of course, we'll keep our fingers crossed and just, you know, hope for the best, hope for a better economy in 2019. Thank you so much. And of course, have a Merry Christmas and enjoy the holidays. I've been speaking to Kayode Akindele, partner at TI Capital, and Femi Oladehin, partner investment banking at Argentil Capital Partners, looking at, of course, this year, 2018, and what to expect in 2019.